jazz. I'm a big jazz fan, and I'm not even sure why I'm sharing this with you, but anyway, there it is. Right. Anyway, what I want to discuss today is earnings season. I get so many questions every earnings season, how to best play the earnings, and so I finally wanted to address it. So I don't think there is necessarily a right or a wrong way to approach earnings season, but I do think there is one or two ways that suits people better through the lens of psychology and thus through the lens of risk management than other ways. So I think there are some trades that are easier to do than others. The way that most people address earnings season is very simple. They take a position and basically they just hope for the best. Now we all know that hope is really not a good thing as far as investing in trading goes. But a lot of people just try to take a bullish or a bearish bet on any given stock, and then you just hope that the stock reacts that way after earnings. And I can tell you, after nearly 20 years of doing this, that's a very low probability way of trading, and over time, it's a losing way to do it. So at the end of the day, I would certainly advise against this. So what are the two ways that I think are better to trade earnings? Well, the first one is very simple. What you can do is you can buy options, calls, puts, or even straddles or strangles at the money or something like that a couple of weeks ahead of earnings. What tends to happen is that the implied volatility of options tends to rise into the earnings announcement. And so if you do this right, you have a decent chance of seeing an appreciation in the value of those options. Very important though, and again, through the lens of what I've learned over the past 20 years of doing this, is that you do want to sell these options before the earnings report is out so that you don't have that risk holding the options through the earnings announcement. So it's a matter of buying options a couple of weeks, maybe 2-3 weeks ahead of earnings and selling them before the announcement. This gets me to my favorite way to trade earnings. And that's actually quite simple. Basically, it's to not do anything at all. My favorite way of trading earnings is to actually wait until the earnings report is out on any given stock and then see what the reaction has been. There tends to be a pretty good probability that if a stock has a strong gap or move in either direction, either up or down after earnings, that it sees some sort of continuation over the ensuing days, sometimes weeks, or even months in that direction. So my very best trade to do after earnings or through earnings is actually nothing at all. I wait for the companies to report earnings. If they have strong technical moves that are important through the lens of investor psychology as well, I tend to trade it in that direction for what I consider to be a very high probability trade. So there you go, guys. I hope this was helpful for this upcoming earnings season. Trade steady and trade wise, and all the best in your trading and investing activities.